on YouTube. Let's see how this works. Today is day 9, and it is all about becoming a programmatic commercial real estate investor. So, module 2, not really sure. This is really week 2, module 2, however you want to describe it. And what I thought I would do is, if you've been following along with this 30-day challenge, then really where you should be is number 1, you know where you want to go. Number 2, you know where you're starting. You've got kind of clarity, and you know your truth, if you will. Number 3, you understand why you want to get there, because as I've mentioned in the past, you're going to run into some roadblocks and some challenges, and you really just want to be kind of prepared for that. And then number 4 is likely where you don't have the answers, and that is the strategies and the tactics to move you from point A to point B. Point A where you are, point B where you want to get to. So what I thought I would do is just kind of give you some of the strategies that I would or I do give to clients that I work with. And there are 6, and so I'm just going to write them here. Might have to move my microphone so it's not right in the way. So number 1, pick a city. Okay. I prefer that you pick a city that you live in. If you were following along yesterday, then you understand why. So I'm not going to repeat myself on that. Number 2 is pick an asset class. So the asset class could be multifamily, retail, industrial. Ideally, it's something that you've got some sort of familiarity with. If you've never been to an industrial building, then chances are it's probably not right for you to have to start from scratch, because if you've worked in, say, distribution warehouses for 10 years, then you've probably got a good understanding of what the needs are of tenants, okay? That's generally why most new investors start in multifamily, because frankly, retail, industrial, office, medical, they require more of a specialized skill. But I don't want to tell you not to go into it. I just want to give you some guidelines, if you will, okay? Number 3 is how big. Okay. So for me, I'll just tell you, right? So for me, pick the city, Calgary. Asset class, right now, I'm focused on multifamily. I've done industrial, I've done retail, but just where I'm at in the cycle and what I'm focused on, I'm doing multifamily, both value add and new development. Number 4, or actually kind of how big and price. Okay. So you want to understand how, essentially what's the bandwidth that you're going to be able to take down a deal. So for me, 5 to 15 million. Returns is number 4. Now, also understand that if you're new to this, sorry, I just had a hair there. If you're new to this, then you may not have all the answers to this, and that's okay. But what you're trying to do is you're going out into the market, you're researching, you're taking that data, and then you're coming back and saying, okay, based on my market, here's where I think I should be. Okay. So returns, I don't like to give out too many expectations, if you will, because if you're in Toronto, Vancouver, New York, some of these gateway cities, if you will, the returns are going to be a lot less because the risk is less. If you're in, say, Calgary, which is more of a kind of a flat market right now, then, I'd be looking at, on a going in basis, probably a 6%, and I'm looking for ways to add value to get that to, say, 10%. Okay, that's just for me, right? So you will have to do that kind of research yourself. Now you can't see here, so I'm just going to go up here. Number 5 is who's going to manage your properties, right? That's really important, and I think it's one of the reasons why so many investors that have started in, say, residential, after they get to 5 or 6 or 7. I mean, I just got an email from a gentleman yesterday. Shane, I've got 5 properties. I want to create a retirement plan for myself, but it's difficult seeing that path forward in residential. Now, it's not to say that you can't get there. It's just typically on residential, if you're getting $100 or $200 a door, how many doors do you need to get to $10,000 a month or $15,000? Now, if you own an apartment building, you could have 40 units in one building, or you could have a retail strip mall that I helped the doctor get with 5 tenants, and those 5 tenants essentially pay him, between $7,000 and $8,000 a month after his mortgage is paid and everything else. So now, is that enough for him to retire? No, but he's well on his way, right? 2 of those retail properties or 1 multifamily, or, you can just see that the scale is bigger, right? But this comes down to number 6, leverage. My handwriting when I'm trying to do this is pretty poor. Leverage is all about debt. And what I would suggest is, especially if you're new to commercial real estate, you don't want to over leverage. You want to keep, we'll get into this later, but a debt coverage ratio of a minimum 1.3. Minimum. That really means that if your mortgage is $100, you've got $130 of NOI, or net operating income, which means you've got 30% additional cash flow coming in to cover your mortgage. So that is really how, some of the questions that I would ask on how to become a programmatic buyer. Now, I've written, I don't know the exact number of words today, but it's usually most of the articles that I read are around 1,500 words. It takes me a couple of hours, and it goes into detail on how to do this and why it's so important. And I'm going to tell you just at a very high level why being a programmatic investor or buyer is so key. And I should actually make a comment that I learned this term from a gentleman, Derrick Lobo. It was the first time I ever heard it. He's out of Toronto, really smart guy as it relates to multifamily. So just want to acknowledge that, because that's not a term that I came up with. Okay, so where was I going with that? Okay, so when you are new and having conversations with, say, a commercial broker for the first time, if you are too vague in terms of the type of properties you're looking for, what ends up happening is, I just want to move the microphone a little closer. What ends up happening is the brokers will view you as, I'll just use the word a newbie, right? And what that means is they have kind of this picture in their mind that, okay, we've dealt with people like this in the past. They're tire kickers. I'm not saying this to be mean. I'm just saying that this is a reality, right? Commercial brokers, they only get paid if they do a deal. And so if you're new and you don't have clarity, and you're waffling, well, show me this and tell me about this, and it's like, now all of a sudden you're creating work for the broker, versus saying, okay, so I'll give you an example of when I used to sell commercial real estate. I remember sitting down in the meeting, and I asked the retail developer / investor, I said, so just so I understand, what type of properties are you looking for? And I'm going to paraphrase a little bit, but it was like, he went for like 20 seconds and it was just like, boom, this is what we look for. Shane, we're looking for 20 to 100,000 square foot retail centers in metros of 50,000 plus, service-based, grocery anchored as a preference. And he kind of rattled this off. And I was just like, okay, perfect. So guess what? Within 2 months, I found a deal that was exactly what he was looking for. It was 20 some odd $1 million. I brought it to him. We made an offer. Unfortunately, circumstances, we didn't get the deal, but he's closed on subsequent properties. And what I would say is that because I knew exactly what he was looking for, I was able to go out to the market and bring that to him. And he said yes. Like literally within, I don't know, 5 hours, I had an offer, because it was precisely what he was looking for. So that's the importance of being a programmatic investor. So I think that's really what I wanted to focus on today. And I suppose probably, just as I'm kind of going through my notes here, there's generally 2 or 3 major questions that new investors have. And they're like, okay, well, that's great, Shane, if I'm a programmatic buyer, but it usually comes down to money and structure. Like, how do I do that, right? So I'm out finding properties, but how do I get the money to do it? And then how do I structure it? So what I would suggest is, number 1, grab my book, Club Syndication. You can go to my website, download it for free. And then number 2, or buy it. I mean, it's like $7, and it's just basically just pay the shipping. And then number 2 is how to structure those deals. And I'm going to get into that more tomorrow, because quite frankly, that would require a longer conversation, and I want to keep this under 10 minutes. So that's it for today. Post below, subscribe if you're not subscribed, and share this with someone that you think might get value if they're interested in investing in commercial real estate. That's it for today. Bye for now.